Is taking stock on Bloomberg. I'm Pimm Fox. We've been talking about the stocks that fell today. That was basically all of them following the worsening situation in Japan and the nuclear crisis unfolding there. So what happens next to investments? That's why we have Rick Bensignor, chief market strategist at Dahlman Rose. He's going to help us out. Also, he is the editor of New Thinking in Technical Analysis, Trading Models from the Masters. He's one of them. Also, we have David Winters. He is the chief executive of Wintergreen Advisers. His Wintergreen fund has outperformed 97% of his peers over the last 5 years, a noted value investor. All right, gentlemen, so we see what happens to the stock market, Rick Bensignor, and it seems as though everybody decides to sell because of events taking place in Japan. Is that the real reason?
Well, it's certainly a lot of what's caused the 40 or so S&P point decline in the last couple of days. You can't say it's not related to that. We had actually turned bearish some 3 weeks ago with the S&P about 1310, 1315, looking for a target of 1245 to 1230. So not a huge decline, but enough to put a little pain into the people who paid up recently at the latter stages of this rally.
All right, so people have some pain. What do they do?
Well, it depends on really your time horizon. If you think this is a minor blip in a much bigger bull market, then you kind of hang through it. If you're more short-term oriented, then you are going to feel some pain, and you have to kind of adjust accordingly. I think a retail investor who's looking long-term just kind of quietly sits through this, not really making many new capital commitments until we see how this plays out, but also probably not significantly reducing exposure. If anything, I'd take a little off, because when things change in the world and you're really not sure what's going on, it's not unwise to take some profits. The market's moved up hugely in the last 2 years, so why not take a little off?
All right. Well, I like that Rick Bensignor said it's all about your time horizon, because I know with you, David, your time horizon, I don't even think it's a horizon, because it never ends, right? I mean, you're trying to buy companies, and I don't think you really like to sell anything ever.
Well, we'll sell when we have a better idea. We trade up, or if things really change. But, you know, our belief is the way to get really rich is to buy the trifecta. You buy a good business with improving economics, management that's working for you, and a cheap price. Prices have gotten crushed. And so, you know, we're shopping.
So are you shopping in Japan? I know that you've got Japan Tobacco as one of your holdings. Have you been shopping there?
Well, we certainly are looking, and we believe, our hearts go out to the Japanese, and we believe that Japan ultimately will get through this, and the world will get through all these problems. And if you look longer term, you can get cheap stocks. And that's how the richest people on the Forbes 400 did it, and that's what we're trying to do for the Wintergreen investors.
All right, so if you're trying to do that, are there specific areas of the market that you're looking at right now? I mean, are you looking at stocks in Japan?
Oh, yeah, sure. We'll look at stocks in Japan. We think Japan Tobacco has 3 factories, so they were prepared. And, it's a well-run company. And then, throughout Asia.
And they've got overseas operations, too. They've got businesses outside of Japan.
Yeah, they've diversified. So, there's a lot of really smart people in Japan. They brought us wonderful products. And so, we think throughout Asia there's cheap stocks. We love Genting in Malaysia. We love Jardine Matheson. We've talked about the conglomerate that's got consumer businesses. So we think if you look at railroad car owning,
And we do, our company does.
Yeah, and railroad car loadings are going up. So we think the U.S. economy is getting better, and at some point, sentiment will change. And when it does, as you know, sir, everybody piles in.
This is Taking Stock on Bloomberg. I'm Pimm Fox. We're talking about the economic effects of the crisis in Japan and today's market sell-off. My guests are Rick Bensignor, chief market strategist at Dahlman Rose. We also have with us David Winters. He's the chief executive of the Wintergreen Funds, Wintergreen Advisers. Now, Rick, we were just talking during the break, because I keep trying to find out who is doing the selling. And you educate me a little bit, because you say it doesn't take a lot of investors. It does not take a lot of sellers to push the market down. Explain that.
Well, if you don't have resting bids underneath the market, then even incremental selling will push it down, similar similar to the way we've moved up as much as we have since March 2009 low. The S&P doubled itself at its peak. It's not that there were so many new buyers the last 100 or 200 S&P points. It was the lack of sellers. So even small incremental buying is enough to push the market up when you have nobody on the other side of the trade. If today all you needed were a few decent-sized funds who wanted to sell out of some stock, you have no buyers given the news, you're going to push the markets down. And you saw two vacuums on the downside today where the S&P fell 10 or 15 points in minutes because there's just nobody to buy when a few orders come in that are decent-sized orders to sell.
David, it sounds almost like a game of musical chairs, doesn't it? I mean, as long as the music keeps playing and people keep, offering those bids into the market, the stocks go up regardless of whether they actually go ahead and buy anything. And as Rick says, all you need is a couple people to come in, push the button and say, we want to sell, and it sends everything down. That's a scary thought.
Well, people are momentum investors, and people are afraid after 2008. They're afraid of the market going up. Most people are on the sidelines. So, Rick, the market's thin. So the moves are exaggerated. So if you're a long-term global value investor like we are at Wintergreen, you can take advantage of it because you can buy into weakness.
Or you can bury your head in the sand. But obviously, you want to be buying when other people are selling things that you think are of value.
Exactly. And, I think that there's a lot to do because there's so few people thinking long-term. The results, when we study the press releases of the earnings results of our companies are doing great. But the stock market is weak because people are frightened.
So you think this is an emotional move today?
Well, the last
couple of days.
Certainly, but it's probably not fair to say the stock market's weak in general, as we were saying on the break. The S&P's done a double in 2 years. I think that blew most people's minds away that we came back as much as we did from where we were 2 years ago. We're only weak in the last few weeks. We're not weak in general. The market's still up hugely. Today you turn flat on the S&P for the year.
All right, we got to leave it there, gentlemen. I want to thank you very much, Rick Bensignor, David Winters. Always a pleasure. Grateful for your insight.